Adam Parker, great to have you back, AP.
Yeah, thanks.
Welcome.
Yeah, thanks for having me.
So we're in this period. What is good news? What is bad news right now?
You know, it's like we need the old Goldilocks, right? You know, we don't want if it's too good, then people will say, wow, they're going to stay hawkish for a long time, and if it's really bad, people will get nervous that the bear case on earnings could form. So we're back in that we need Goldilocks mode. And look, we know that a lot of what moves the markets is perception about policy and perception about rates. It seems like the data, we get some big data points next week, right? And so I think that could cause, I think today's the first I would call low vol day we've had in a while. S&P, basically flat. So feels like people are waiting for some Fed commentary for the CPI and some other stuff next week to get some capital moving around.
We got Bank of Canada this morning signaling a potential pause in their upcoming meetings. Does this get easier once the Fed does pause and we can worry about the work that's already been done versus how much more they would add?
I think you guys saw in our note, there's like 5 or 6 things that are just competing forces. It's like we're tied at 0 because there's 3 positives and 3 negatives, right? We've got, I think, a much higher probability the economy is slowing than it's getting better. I think that's pretty obvious. But we've got incredibly low sentiment. We see it when we get a 7.7% CPI and stocks are up 2 years of returns in 15 minutes, right? So we know there's some power to get behind things if we can believe in the soft landing, if we can believe the consumer's robust. I'm really not in that camp. I think we're going to continue to slowly erode as we talked about a couple times.
You've mentioned this a number of times. You actually think 23, 24 is not going to be some great big growth. So you haven't changed. That view hasn't changed in the last few weeks or anything you've seen in the data.
I think that's still my base case because I just don't see this the V shape that we've all gotten used to in aggregate. We've gotten used to there's a collapse and then we get a bunch of fiscal and monetary stimulus and we get a V recovery. I don't see us on a V recovery path. I think we're, I think.
Why not, though? Explain it again.
Because I don't think the Fed's hoping that they're going to end up, cutting next year. I know that's what's in the price. It's next November it gets above 50%. But why would they be raising rates aggressively now to cut them next year? I think they're hoping that they could do it to the point to slow things down and not have to end up, providing stimulus within a 6-month period when you just did a humongous, reduction. So we'll see if they're that good, but I don't think that's the base case that they start cutting next year in my mind.
Yeah, of course, the implication of that being that maybe they've broken something if they start cutting, right? Like that's the concern there, potentially.
Yeah.
But longtime market participants will say that there tends to be 3 legs to a bear market. Are we there yet? Are we in the 3rd leg, or does something more to that point need to break?
I think that the top-down folks are getting too negative about earnings. I think, when people say 190 to 200, that feels like when you get a bit of a clearing in there. I think that's way too negative. I think the S&P 500 have some superior attributes and ability to protect margins that probably 220 or 215 is a more reasonable estimate. I think we're out with 218. So if you get 190, that becomes what people think. The market can have another big leg lower. I think that's reasonable. I don't think that's what's going to happen, though. I think you'll see. Look, next year probably auto SAR will be up even though the economy's slowing. You can't show historically that ever happened. So there's some things that are offset as we still get, I don't know if the pig through the snake's the right analogy, we still get stuff happening through COVID, that you're just getting some anomalies still occurring. So I don't think earnings are going to collapse in aggregate for the S&P, and I think that's a positive. Sentiment's clearly low. I've got micro cap and small cap stocks trading basically at all-time lows on price to forward earnings. So I could see more and more private companies saying public equities look cheap to me. This started about a month, 6 weeks ago when you saw Blackstone do that Emerson deal. It was a little bit of a watershed of like, wait a minute, these guys think public things are cheaper than private. And now I've got microcaps trading at 6 times forward, small caps at 10, 11 times forward. So I think you could see that as a positive vibe when you get more deals and people feel like there's a floor valuation in there for some of these names.